at the risk of being very redundant, I'm going to repeat what we believe have been the major factors that affected the market over the past 12 months. Obviously, the precipitous drop in oil prices, the elevated level of geopolitical uncertainties, and of course the military operation in Yemen. As we'll see from the coming slides, these three factors have had quite a prevailing effect on market behavior, both private M&A and also public market in terms of IPOs and market valuations. So before we start talking about specific numbers, because I will be mentioning a lot of numbers, please keep in mind that there are no official central repositories of some of the statistics that we use. So there are people who exert an incredible effort, like Zawiya, to try to collate the information, but you cannot consider it 100% accurate because there's no framework to automatically or officially collect the data. So some of these data points might not be completely accurate. I'd like to bring your attention to the graph on the top left side. And as we can see from that graph, the M&A market has undergone a high double-digit drop from its 2014 level to the 2015 level. Again, of course, due to these factors and other factors which we'll talk about. The overall market, in terms of size and in terms of value, has dropped by almost 50%, and the in terms of number of deals, it's dropped by a third. So the total market has shrunk significantly, and the size of deals have also shrunk. Because obviously the main reason for this drop is attributed to the economic factors that we talked about before. However, we think that the drop in the market is caused not only by buy-side pullback, which is what these economic factors would do. It's also, in the case of the Saudi market, it's also heavily affected by the sell-side behavior. And we talk about three observations that we've had from the sell-side behavior point of view that have caused this rather large drop in the M&A market. And they are, first and foremost, valuation expectations of sellers in the private M&A market. The valuation expectations get quite sticky. So even though the Saudi market has dropped 17% year to date, it's dropped 23% from its year high, which is a huge drop. Most people offering businesses to private M&A transactions are kind of still in denial, and they are asking for multiples that would be very similar to the multiples they would have asked for a year ago. So obviously, if the asking prices for private transactions don't adjust, then obviously potential buyers will hold back, at least temporarily, until one of two things happen: either the prices adjust, or they come to the conclusion that the prices are not going to change. And I think I believe strongly that this is one of the reasons why we've seen a more than 50% drop in the market. We'll cover also a little bit the IPO market, because that has certainly a bearing on people's appetites to do M&As, and also it's a bellwether of similar types of activities. So in 2015, the Saudi market witnessed 3 IPOs only throughout the entire year. which represents a 50% drop in terms of number of IPOs, and it represents a whopping 80% drop in the value of the IPOs. Among the reasons for the decline in the IPO activity, and I won't bore you by repeating the geopolitical and all that, I think you've heard enough of that, but there are other issues. One of them is obviously high market volatility. The market has been quite volatile this year, and that makes it quite difficult for the issuer and the underwriter to agree on a price. And so I know of at least 1 or 2 cases where the file got all the way to the CMA, and then the sellers decided to yank out the file because the price expectations, and this was not because CMA imposed prices, because the underwriter said, like, you know, under the new reality, you can't get this price. So it's a discussion between the issuer and the underwriter. Another very important point is what's happening to corporate earnings. We've done some analysis in-house on this, and as of the end of the year, last year, 2014, the earnings per share for the public companies grew by 4%. As of the end of third quarter this year, 9 months, earnings of Saudi public companies has contracted by 15%. So your PEG has shifted dramatically. And of course that is reflected, like we said, in the stock market prices, but it's not necessarily, the effect of that would be even higher for companies wishing to go public. Because if you have a growth rate of 12-13%, then your underwriter might allow you a smaller discount to market multiples to go public. But if you're showing 0 or negative growth, then that gap in the PE multiplier is going to go significantly larger. Now, obviously, this huge drop of 15% is driven primarily by the petrochemical sector, which is quite a large portion of the Saudi index, and also, as we all know, the profitability of that sector has been decimated because it's linked to oil prices. So, in order to do better analysis, you need to look at the PEG sectorally. And we do some of that. We have done actually a lot of that, not just some of that. And so even when you look at other sectors, you see significant weakness of earnings, such as the cement sector. The banks are growing, but not nowhere near last year rates. The only sector that's an outlier to this observation has been the insurance sector. Which has witnessed actually double-digit growth in earnings as opposed to drop, thanks primarily to regulatory efficiencies. The regulator, SAMA, has issued some new directives and guidelines which have done a great job of cleaning up that market, and also some new directives that created better market conditions. I would like to bring to your attention the last bullet on the slide, which is very telling of market psychology, which is a very important, obviously, factor when it comes to investment, M&A, IPOs, all of these things. Despite the smaller IPO market, which is high double digits smaller than last year, the level of subscription interest appears to have also waned. Whereas the average oversubscription in 2014 was 12x, so an 100 million issue would be subscribed for by 1.2 billion. This year, that ratio has dropped by 50% to 6x. So if you look at how much money people were willing to deploy into the IPO market, and you multiply last year's IPOs by 12, and then you multiply this year's by 6, you'll see that there's probably an 85% drop in appetite. Or more. I haven't done the calculation, but it would be a huge number. I must issue a disclaimer here. As of next year, once the new listing regulations come out, which they should, I think Q1, that ratio will not, we will stop monitoring that ratio because the dynamics of how you list a company in Saudi Arabia is changing, evolving much to the better, in my opinion. And so this ratio won't be relevant anymore. But for this year, I think it tells a very, very big story. So with all this depressing doom and gloom news, I hope I can make you feel a little bit better before we go all to lunch. This slide talks about our perception of outlook, and we do have some contrarian views, so hopefully that'll bring out some questions and some, but no hackles, please. So in 2016 and 2017, perhaps, is that going to be the same of what we've seen in 2015? We believe not. We believe that the market will witness, M&A market in particular, will witness, and the IPO market actually, will witness some significant growth over this year. And we believe that there are three factors that will drive this growth. The first factor is that seller valuation expectations will eventually adjust, not necessarily as much of a correction as the public markets, but enough to make many deals interesting again. And that also, like I said, applies to the IPO market. People will realize they don't want to wait 5 years or 3 years, or so they'll move on with it. The second is quite an interesting new feature in the Saudi market. It's that a number of public companies whose earnings have stagnated or dropped have come to the conclusion that they need to pursue inorganic growth mechanisms to supplement their earnings growth and to show strong positive trends. And as anecdotal evidence of that, in the past couple of months, we at Amwal have had 3 public companies approach us to talk about the potential of buying some of our investments, to fold it into the public company and show growth and earnings in that fashion. We're in fact in the middle of negotiating a transaction with one of these public companies on one of our assets. The third reason is, despite concern and consensus otherwise, and again, we offer a contrarian point of view, we believe that bank liquidity and therefore appetite to finance transactions will actually increase by 2017 rather than decrease. And that'll of course help the liquidity and help the market grow. And the reasons why we believe liquidity will increase is threefold again. If you look at banks' loan books today, a significant portion of that book is related to contractor financing. And the bank's wallet share of contractor financing next year will increase dramatically because of other years. So actually next year we will feel a bit of a pinch. However, by 2017, as many of the mega projects come to completion, the contractor loan book will drop dramatically, leaving banks with newfound liquidity and appetite to deploy into new areas of business other than contracting. So for these 3 reasons, we believe that liquidity will contract in 2016, but we'll see a floodgate of bank appetite to make new loans by 2017. People talk about, the government needing to borrow, sucking up liquidity, but if you know a little bit about loan-to-deposit ratios and other technical issues like that, it doesn't really have, lending to the government does not have the same effect in any shape or form on a bank's liquidity than lending to the private sector or banks' ratios. We also, like I said earlier, expect the IPO market to grow starting next year, and not in small part due to the new IPO regulations which are about to come out. However, there are still challenges. Some of them my colleagues talked about. There are still some challenges that unfortunately delay or curtail the volumes of transactions that we could go through in any given year. And we list them here. One of them is valuation expectations, and we talked about that, and we said that might lag reality for longer than we hope for, and that would, of course, cut the ability, reduce the amount of deals that would happen. Payment structures. Some of this was, I think, very well covered in the previous session when we talked about earnouts and stuff like that, and resistance of sellers to some of these more innovative techniques to bridge the gap between bid and ask. Timeline. Everybody who's done a deal in Saudi Arabia knows that the gestation time for a transaction here is somewhere between the gestation time of a human fetus and an elephant fetus. So, and I've not seen it happen less than 9 months. So, legal, I think I'm going to skip over that because my colleagues did a great job of covering that. I don't think you could talk about any particular sector in Saudi Arabia like privatization. Like M&A or IPOs or anything like that without talking about what the government is doing and what it intends to do, because it's such a large part of the Saudi economy. So I just wanted to shed some light about where we see the trends going. So a number of newly and recently announced reform initiatives, and also some hints of things to come, make us believe that the landscape will be enhanced over the next, I would say, 6 to 9 months. We talked about the new companies law, which is a very positive step in the right direction. We've been talking about this new law for how long, gentlemen? I think at least 15 years. It finally happened. So there is a sense of urgency to move and do things. I think the BOT and BOO programs are going to come back again very soon, and that obviously creates opportunities for both investment and for M&A, because some of these privatizations might be not directly to IPOs, like we've seen with Saudi when they privatized three of their subsidiaries. It wasn't through IPOs; it was through M&A auction. And then, of course, the privatization itself. So I think the longstanding announced policy of the government of privatization will see some big push beginning of next year for obvious fiscal reasons, but not just for fiscal reasons, for the keenness of the new administration, if I could call it that, to get things moving. And I think we already saw a hint of that just a week ago or 2 weeks ago. GACA, which is the regulator of the airports, or the owner of the airports, announced that it's converting to corporations the major airports in Saudi Arabia, and obviously that's a step similar to what Saudi did, similar to the government did with STC. That is a step to then start selling these assets, or at least portions of these assets.
I just want to ask you about the BOT and projects.
Yes.
What do you expect the sectors that will be covered in the next 12 months?
Privatization or BOT, or both? Or?
The BOT?
BOT.
Yeah.
Well, if you recall, in between, I would say 2002 and 99 till about 2007, literally every new mega cogeneration plant in Saudi Arabia was BOT. And then, oil goes up to $100, and this is not at the top level, but at the level that feels ownership of these assets, are saying like, why are we doing this? Now that we have money, we don't need to do this. They don't say it that way. They say like, it's cheaper that we do it, it's more efficient, which is of course completely fictitious. And so you find excuses to grab back the authorities and the powers that you used to have, which is natural. I think in this round, first of all, there's a financial issue. So you have no choice. If you need to build another power plant, you have to. You have to do it with BOT. But there's another factor, I think. Even if oil goes up again, the focus on fixing the economy is laser sharp, and it's a different paradigm than we had a few years ago. So that's, I haven't answered your question, is what sectors? I think one sector will be definitely power and water, without a doubt. I think ports going forward will be all BOT for sure, whether it's a new port or existing ports, because existing ports are, in some cases, a fraction of the size they need to be for efficient operation. So that's another major area where we're going to see BOT.
Quick question, kind of simple one. If governments increase loans,
Yes.
the government debt, then interest rates, theoretically, would go up, and this would eventually crowd out private investors because they will be more likely to put their money, just for in banks for bonds instead of going into the industry. Do you think this would happen in the next 2 years? You brushed over this point, and I'd love to hear your opinion.
Well, people are really fickle, and they have short memory spans and ridiculously high expectations sometimes. Sorry, let me explain what I mean.
Problem.
Let me explain what I mean. I mean, just 5 years ago, interest rates were at 5-6%. And all this ruckus that we've had, this noise over the past 6 months, will Yellen increase interest rates or not? For God's sake, she's going to take it from 0.25% to 0.5%. Who cares? Honestly. And so yes, it might have an effect, and let's call that effect even triple-digit bips, so 100 basis points. How much is that going to affect the economy? In an economy like Saudi Arabia that is highly unlevered, full of cash, I don't see it. I mean, in the US, yes, it starts to make a difference, even 0.25 point, because people buy houses, and can they afford the house or not afford the house? But in an economy where it's practically a cash economy, makes no difference. And if I sound like I'm complaining, is because I do sit on the board of a bank, and it really bothers me when a client comes and starts negotiating for 1/18% on interest, when he's paying nothing compared to what he paid 4 or 5 years ago when the interest rates were so much higher. But anyhow, that's a different story. Please, sir.
Yes.
Go ahead.
Yeah. Assalamu alaikum.
Alaikum salam.
My question is not so technical. I can see everybody speaking technical term. Sorry for my experience is not in the area of finance at all, but I would like to ask you straight questions. If you would like to invest or acquire a company, do you advise that you start doing it now, or you say, no, hold it, maybe after 6 months, better to start, or the other way around, you say that, well, the best way is not to do it at all for the coming 5 years.
So we have three options.
Yes.
Today, 6 months, or never?
Yes.
Okay. Well, definitely not never. Definitely. This is still a vibrant economy. The demographic is extremely attractive. The per capita GDP is one of the highest in the world, and oil will come back. So I definitely not never. Today or 6 months from now, that's a good question if we had like 100 deals happening every month, like you would in the US, and then you could ride the wave today or wait 6 months. Problem is, like we saw, there's such a shortage of deals. If a good deal comes to me today, I'm not going to wait. I'm just going to pick it up and run with it. Because, there has been a huge shortage this year of good deals. So I will not wait. Yes, prices might go down a little bit 6 months from now, but I'd rather buy it then somebody else, you know. So I think I've answered the question. If it's a good deal, I'll just go ahead and do it. Please, sir.
Ammar, thanks for that. At the risk of you asking for a speaker's fee next time, thank you very much for that. It was excellent. I want to get your point of view on one of the statistics that Philip McCrum showed, and that was, you know, what are the topics in the boardroom? What is a board staying awake at night because of? And one of them was the commodity prices. Another, the second highest around the world and in Saudi was profit margins and profitability. The third around the world was portfolio optimization, and that was not even on the radar in Saudi Arabia. So I'd like to get your point of view in terms of family businesses, the need to grow, the need to feed the mouths, assuming capital isn't endless. When do family businesses start to look and say, you know what, I can place better bets on these industries and sell some of these?
I completely agree with you. I'm totally almost shocked that it doesn't figure in the Saudi, because this is like the least focused market that I know of. There are, I think, few countries in Latin America that have a similar feature to what we do, which is, what we're talking about is that big families. So if you look at very wealthy people in the US or in the UK, or 15 of the G20, they would have made their wealth in one business and one business only. As opposed to in Saudi Arabia, wealthy families have anywhere between 5 and 25 businesses, and you know, from shoe shops to construction to I don't know what. And that is not sustainable in the long term. We think it's not, at least technically, academically, we think it's not. But there might be a reason why it is sustainable, is because these families like to inherit their kids, different lines of businesses. I know a few, and I'm sure you do, you know more than me. And they want to keep 15 businesses because they have 6 sons, and each one will pick a business, and then they'll divest the rest. But eventually, the chickens will come home to roost, and they will need to get rid of these other businesses because they're not making enough money. That's invariable. Is it going to happen in the next couple of years because they need to focus on core business and profitability? I don't think so. I think the obituary will be the test, not, unfortunately. So it'll take a bit longer.
Yeah, this is Furqan from Al Raji United. Just had a question. You kept on reiterating the fact that there haven't been too many deals this year, and one potential trigger going forward is that the valuation gap will improve. But you did mention the fact that sellers tend to be sticky when it comes to price.
Valuation expectation, yes.
Yeah, valuation expectations. Do you feel that, like a lot of people are very excited that this could be a potential trigger this year, but the preference for defensive sectors going forward will increase, and sellers would know that? And so do you think people are actually overestimating that? So it will really depend from sector to sector, and this preference for defensive sector will actually not lead to the valuation gap improving?
Yeah. Well, I mean, the writing was on the wall from 2 years ago. We at least from our perspective, we stopped entertaining or looking at anything that's construction related 2 years ago, because a typical cycle, and this is like economic theory, this is not just in Saudi Arabia, a typical construction cycle is 5 to 7 years. We had a super cycle of 10 years. And even, I would bet, even if oil was at $120, we would see a contraction in the contracting sector. You cannot keep just building stuff. So obviously that's a cyclical sector that people like me, like us, would avoid. And obviously sectors that are recession-proof, like healthcare, things like that, are obviously way more attractive to us. But let me warn you a little bit, because sectors that are seemingly not oil related turn out to be not so independent of oil. So if you look at retail in the past 2 months, I would bet you the retail earnings by end of year will disappoint a lot of people. They will surprise and disappoint a lot of people. And we could read that because we monitor, one of the things we monitor is ATM and swipe card withdrawals, and you could tell it's a very good proxy of what people are doing in the supermarket and in the mall. And for some reason, even that has been affected. It could be just, psyche. It could be people are feeling funky a little bit and they just don't want to spend everything in their pocket. But beware of assuming that all these sectors are recession-proof, because they're not all recession-proof.
Can you please shed some light on the new envisaged IPO regulations? In which direction are they heading, and is it going to be easier or harder for private firms to be listed?
I will. First of all, it is published. One of the beauties of the evolution of the Saudi system, like the new companies law, which is not yet promulgated, is published. And this is like a new thing in Saudi. Before, we'd see it in the Gazette, and that's it. So now these things are published, and they give you a time to comment on it, the practitioners, and so it's published. So you could pick it up from the website of the CMA. But to give you the most important feature is that price discovery and price determination is. We moved from 5 years ago where it was 100% in the hand of the regulator. But with the new regulations, it'll be, I couldn't say 100, but certainly over 90% in the hands of the underwriter. And this is a very, very important element. Because when you have the regulator who has the public interest and only the public interest in mind, the discount sometimes becomes quite, in the view of the issuer, oppressive. When it's the underwriter, then it's a haggle between the underwriter and the issuer, and it becomes much more commercial. Another important feature is that they're asking the underwriter to do proper underwriting. So it's a hard underwrite. So, game over where you make underwriting fees for just, no underwriting. It's now real underwriting.
I've been leading an IPO exercise for the past year and a half, and I think what you've just mentioned is exactly what we've been going through. But my question is, will be any new regulations that they might impose?
Yes. Those are the new regulations. Like we said before, some practices might exist with the Ministry of Commerce, but they're not instilled in law, and now they're getting instilled in law. Same thing. The new regulations will tell you the underwriter has to do a hard underwrite, and they will determine the price, and we have nothing to do with the price. Just in plain English, as opposed to before, they were moving in that direction, but they didn't have to. I mean, a new CMA head may take it back 2 years, 3 years, right? Once you publish the regulations, then it's a hard fact.
Thank you.
Thank you, Ammar. Thank you for your presentation.